housing is a good bet in America. We're not going to solve our inventory challenge anytime soon. It'll get a little bit better, but mostly home prices are going up. We have customers who stretched too far. And I stayed in touch with them, and they can't sleep at night. It's easy to look at homes. It's harder to make offers, especially when rates are above 7%. But usually in the first few weeks of January, you can tell it's going to be on like Donkey Kong or pack it in. It's going to be a tough year, and we're all trying to figure out which way it's going to go.
Glenn Kelman returns to the show. He is a CEO of Redfin, fan favorite for covering real estate and housing. We'll be going over Redfin's 2025 housing market outlook. Glenn, always good to have you. Welcome back.
It's good to be here.
Yeah, it's good to have you. People can check out our last interview that you did in the summer. Bit of a slowdown you called for in the summer. You have a bit of a different outlook for 2025 than you did last year for 2024. So we'll talk about that. Before we get your outlook and what's next for housing markets, let's talk about the Fed. So the Fed this week signaled that they may put rate cuts on pause.
What would you expect at this point the timing might look like? Would a January cut potentially be possible, or does it pause next month?
So remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace of further adjustments. You ask about 2025. I think that the slower pace of cuts for next year really reflects with the higher inflation readings we've had this year and the expectation inflation will be higher.
They didn't, obviously no promises, but they're a little less reluctant to accommodate the markets next year than this year. And the markets really didn't like that announcement. Stocks went down. What are you anticipating monetary policy to be and do in 2025? And will mortgage rates follow is the bigger question.
Well, I do think mortgage rates are going to follow the Fed. The question is, what is the Fed going to do? The error bars on the likely Fed action must be very large just because there's so much geopolitical risk. No one knows if the Trump administration is going to administer heavy tariffs, how that will affect trade and prices. There are a huge number of factors in play right now. So that was reflected in the Fed's vote. It wasn't unanimous. There is division within the Fed about how strong inflation is right now. So it's really anybody's guess.
Okay. Well, that actually is prediction number 2 of your list. I'm getting ahead of myself, but let's just start there. Prediction number 2, mortgage rates will remain near 7%. Mortgage rates are likely to remain in the high 6% range throughout 2025. Can you comment on your outlook here and basically what's led up to this mortgage rate that we've seen currently?
Well, I think that prediction, which was made before the Fed announcement this week, has been vindicated because rates shot up about 20 basis points in the wake of that meeting from 6.9 to 7.1 or 7.2.
Yeah.
We've come back down slightly, but we don't really see any basis given the pressure for the government to lower taxes. Spending will still probably be high next year. So government deficits are going to be a major factor. And then there is this inflationary pressure. So it's hard to imagine someone like Fed Chair Powell really taking a risk on inflation. He has been hawkish all the way through, and I would expect the Fed to remain vigilant. So we don't have any reason to believe that mortgage interest rates are going to come down over the next 6 to 12 months. As I said, though, the error bars are large, so anything could happen, more so than in most years. But right now, it looks like we're going to have pretty high rates for as far out as the eye can see.
Can you comment on why here? So here's this is the 30-year mortgage rate. I will put this on my screen. So we're looking at the same chart here. Can you comment on why the mortgage rate was kind of, it wasn't really following the Fed funds rate since September. As you know, the Fed's been cutting rates ever since September and the mortgage rate's been going up. Why the divergence?
Well, because the mortgage markets price in Fed action. So
okay.
They anticipate what the Fed is going to do. And really, if you want to understand mortgage rates, you can look at yields on treasuries, or you can just look at inflation data. So the inflation data in September and October was much more encouraging than it has been over the past few months. It did look like we were ahead of inflation. And now I think there are resurgent concerns. And so as soon as that happens, you really trade on the rumor, sell on the news. Most investors in mortgage-backed securities had priced in more Fed cuts than the Fed actually delivered. So there's been this interesting split because the people who buy mortgage-backed securities had already priced that in, but actually we were surprised how much home buyers, the consumer, had been waiting for that Fed cut. So even as rates rose, the Fed cut. It didn't cut as much, and it was more cautious about future cuts than we expected. And therefore, you saw rates go up, but home buyers come into the market. And usually those two trends work the opposite direction. When mortgage rates rise, consumers flee the market. But there had been a significant psychological barrier to coming into the home buying market, waiting for that September 18th rate Fed cut. And then on November 5th, the other psychological barrier fell. People had been waiting on the election.
Okay. Speaking of inflation, this leads into one of the next predictions on your list, which is rent. So as you know, the shelter component of the last CPI print largely was responsible for the higher print, 2.7%. I'll just put the shelter print line here. This is measured by owner's equivalent rent, which is, a survey of homeowners and whether or not they'll raise or lower rents for the following year. What do you think is going to happen to the shelter component of the CPI going forward?
Well, on the rent side, it's coming down. There's just
Hmm.
so much apartment inventory coming available in the United States over the next 12 months. So there's been a building boom, but it has been asymmetrical. Most of the inventory coming online has been apartment buildings. So I would expect rents to come down at least relative to the prices people are paying to buy a home. My expectation, therefore, is that home ownership rates will also decline. So some of
Okay.
that is driven by just the fact that some people can't qualify for a loan, and some of it is driven by the fact that there's just more rental inventory coming available in 25.
I've read online that rents don't usually come down. Maybe they'll be sticky around current prices. They may not go up as much. But are we talking about actual deflation of rent here, Glenn?
Well, usually your landlord isn't going to offer you a deal out of the blue, but what
Yeah,
happens when a new building comes online is that the rents for tenants coming into that building
I
as
see.
the property management company struggles to put heads in beds, those rents will rise less aggressively or there will be some discounting. So my expectation is that rents are always sticky. It's a recurring revenue business for the people who own apartment buildings and the people who manage them. But I do think you're going to see a deceleration in asking rents. It used to be that when buildings opened up, there was a line out the door to fill them, and the property manager was able to command a real premium. And now we're seeing more pressure on the property manager trying to fill that building in the next 3 to 6 months. So that's where I think you'll see some softness. But just generally, real estate is less liquid than other types of assets, so it's just going to be less volatile in its pricing.
Prediction one, that leads to prediction one, home prices will rise 4% in 2025. Um, on the back of, it says we don't expect there to be enough new inventory to meet demand. Just to clarify here, is this different from the condo market that we were just talking about, Glenn?
Yeah, it's less the rentals market now, and this is the for sale market in the United States. And so, that prediction is mostly still the case. Home prices are up 5% for the most recent month, but I think listing consultations are up 19%, active listings are up 7%. So we have seen people lining up heading into the new year to get their property on the market. That has always been the case that you get people doing that at this time of the year, but a year over year comparison that's up 19% has already accounted for seasonality. Maybe the only other factor worth mentioning here is that the fourth quarter of 2023 was unusually soft. So almost all the numbers that are being printed in real estate look really good right now
Yeah.
because of these soft comps. But nonetheless, there are a lot of people looking to sell their homes. And I think they're less opportunistic economically, where they see some opportunity to pounce on demand or get higher prices, and more just tired of waiting. So when you have 4.1 million existing home sales in the US over the past 2.5 years, that is just an historically low number. I haven't seen that since 1997 when the population was 25% smaller. So I think people are just tired of living in their parents' basement, living with somebody they've broken up with, living in an apartment when they've got a baby and another on the way. So some of this is just pent up demand on the sell side and the buy side for people to move on with their lives.
The homeowner market has evolved the last year. Can you comment on the differences now between sentiment or of sentiment between homeowners and perhaps even new home buyers now versus not even a year ago? I remember you were on the show a couple months ago in the summer and you were talking about some softness in the summer. Anything different profoundly this month?
Yes. I mean, I don't know what to call it. I don't have a dog in the fight politically, so I'm not trying to endorse or oppose the president, but there has been some kind of Trump bump. I think some of that is just driven by people waiting on the election, regardless of who they voted for. And some of it might be some animal spirits because there's sometimes a consensus, at least in the red states, that Republicans are better for the economy. But we did see people come out of the woodwork within hours of the election. So on November 6th, there were more people on our website. There were more people touring homes. And I've just been surprised. I've been doing this for 19 years, and I have never seen home buyers act in the opposite direction of mortgage interest rates for more than a week or two. And here it's been probably 6 weeks where home buying demand has been fairly strong and interest rates have just gotten worse and worse. So something's got to give. If the Fed keeps seeing demand rising, not just in this segment of the economy, but others, even as they try to tame inflation, they have no choice but to keep gunning it on rates. And that'll just make it harder and harder for home buyers to afford the home that they want. But maybe the other difference is that, we saw people rush into the market at other points over the past couple of years when there was a rate dip, only to realize that rates were still fairly high, that it was hard to buy the home that they liked. Anything they could afford was just too ugly. And this time they seem undeterred. I think they know what they're getting into. We'll see how that plays out. I was having dinner with the CEO of another real estate website, and he felt
Hmm.
that in January we were going to see another big bump, usually around the Super Bowl. It's pretty easy to call the market.
Right.
For your Canadian listeners, David, that's like I don't know, the second week.
Yeah, that's we know what the Super Bowl is, Glenn. We're aware.
Explain. Um, Perhaps it's broadcast there too.
Okay. Fair enough. So basically what you're saying is no immediate tailwinds yet for this momentum that we're just starting to see, this Trump bump, or
Well, I
headwinds
do
rather.
think there's
What
a
no
tailwind.
immediate, yeah.
I mean,
Yeah.
right now there's plenty of buyers in the market. It's just hard to tell whether they're going to pull the trigger. So, it's easy to look at homes. It's harder to make offers, especially when rates are above 7%. So, I think everybody is waiting for the other shoe to drop. One shoe has been the election. Maybe the next shoe is the turn of the year. But usually in the first few weeks of January, you can tell it's going to be on like Donkey Kong or pack it in. It's going to be a tough year, and we're all trying to figure out which way it's going to go.
What is your outlook on housing starts into next year? Are you expecting even more inventory to come online?
Well, housing starts usually are ahead of inventory by, a year or more. My hope is that there will be a relaxed regulatory environment. I don't think that's a Republican issue. It's now become a bipartisan issue in the United States. There are so many liberal mayors under pressure to lower the cost of housing in LA, New York, San Francisco, and other major cities. So there's an emerging consensus, even in California, which has usually been careful about regulating housing, that we just need to make it much easier for builders. And if you have a commander in chief who is also a real estate developer in chief, it's probably safe to assume that it will get easier. The federal government can't change that by itself, but it can tie funding for different federal projects to an easing in zoning and other local regulations. So that
Yeah.
trend is only going in one direction. It's just been moving slowly, and maybe it can pick up. The other direction on this, though, is that if there is a crackdown in immigration, there will be fewer people to build houses. Skilled trades largely come from Mexico. The builders have tried to locally source some of this labor and struggled to do so. So that is going to be one issue for them. And then interest rates is going to be the other. They're borrowing money to build these houses. And, we talked about the size of the error bars. If you're a builder, and you have to make a 12 or an 18-month bet on what's happening in housing, given the volatility in the market and given the volatility within the government, where we can't even raise the debt ceiling. There are plenty of open questions around, gosh, should I really break ground here? and put myself 10, 15 million in the hole on this project.
Yeah, a relaxing of zoning laws would help. But what about access to liquidity? Have you been talking to developers about whether or not they're seeing any difficulty in accessing capital for new projects?
I think they can access it. It's just really expensive. So, you end up paying interest on that well in advance of selling any houses. So it's just a risk for them. And they're going to pass that on to the consumer as best they can. But, they're paying that on one end when they borrow the money. And then they pay it on the other end when they sell the house because they're usually aggressively subsidizing the home buyer's loan. So saying, if you buy with us, we'll buy down the points. There's sort of a game that they play with that where they'd rather secretly subsidize your loan than publicly post a lower price for the house. So they can say this house sold for $800,000 without mentioning that they put $30,000 or $40,000 towards the home buyer's loan.
This is
So
an interesting, yeah. Sorry, please continue.
no, go ahead.
I was going to move on to another prediction that you kind of alluded to, which is changing in policies. But this one has to do with cracking down on crime. So, prediction nine, mayors in blue cities will help reverse the flight from urban centers. Um, so, just to recap here, San Francisco elected a pro-business Democrat, Portland as well. Several other big cities in blue states are enacting tough on crime policies to revive their downtowns and retain residents. What's the impact of this?
Well, I hope it's the resurgence of the great American city. Cities come and go. There were periods when crime was up in New York and everyone was leaving, and then people flocked back to the city. Every time we convince ourselves that Zoom can replace the hustle and bustle of being in downtown Manhattan, we just forget how good it feels to be in the center of things. So I do think these big cities are going to come back, but mostly our business over the past 5 years, from the start of the pandemic and maybe even earlier, was helping people relocate from expensive American cities to rural parts of the country. And that is starting to slow and even reverse. Texas has just gone through a massive boom. And now I think people are starting to see that they're not paying income taxes there, but the property taxes are high. Amazon or whatever employer it might be is calling them back to Seattle or San Francisco or New York. And so I do think you're going to see a return to the cities, but it just has to be coupled with a change in the political environment. There's some frustration among business leaders with some of these cities, and there's frustration with residents. I have so much sympathy for what's going on with unhoused people, but I've also just seen the political mood change on that issue where the residents of the city just want it cleaned up. Portland in Oregon was really aggressive about trying to intercede with people who are addicted to drugs. My older
Yeah.
brother had this problem, so my heart was completely with that effort. But at the
Mhm.
same time, you just had all these local shop owners saying this is crazy. There's open drug use, and residents of the city were fleeing. And so almost all those mayors who tried to create a kinder, gentler city got thrown out. And now there's somebody who's more aggressively trying to clean it up. And we just couple that with the trends that we're seeing that some people are coming back to the big city. And it makes us hopeful about American cities. I'm an urbanist, so I'm glad to see it.
Well, that leads to the broader question on geography of growth. So, as you know, ever since COVID, well, especially during the pandemic, there's been a flight out of urban centers to more rural areas. Are you starting to see a reversal of that trend now?
Some people are going back, at least it's slowing. And another factor is just the climate risk. So many people were moving to Florida, and now it's not just the mortgage, it's not just the home price that you have to account for, it's also the cost of the home insurance. And that may seem like a rounding error for most people, but not after all these hurricanes hit. There are very few insurers who are even willing to tread in those markets. And so it's actually affected liquidity. There's so many times where we think we have a deal, and we've agreed on a price, we've locked the rate on the loan, and then the home buyer says, I can't get insurance, or I can only get it at a rate that I actually can't afford. I was planning to pay $3,000 or $4,000 or $5,000 a month, and the insurance is taking it up by $1,000 or $2,000, which is just crazy. So I think that's the final factor is that we've seen people retreat, at least from the coast of Florida into the inland. And we've also seen some of the same dynamics that were, once driving people toward Utah and other parts of the West. Wildfire risk has now brought them back to the city.
That's a good point. Let's talk about insurance and climate change. Hurricanes this year devastated Florida. So terrible, terrible thing. But what is that going to do to home insurance costs going forward? Any changes you'll see permanent?
They're only going to go up. At some deep level, when you think about it, I think one driver of inflation generally is climate change. It's going to affect the cost of different crops as there are more droughts and things like that, but it's also going to affect the cost of owning a home. There's going to be so much political unrest over it. So the state of Florida, the federal government might step in and try to socialize the cost of owning a home on the coast. But in the meantime, you're just going to see more cash buyers. Almost everyone right now who is buying a home in a truly sensitive area is paying all cash because when you get a lender, the lender's going to want the asset being underwritten against to have some kind of insurance on it so they can be made whole in a hurricane. And that's just really hard to do right now. So, we've had some ultra high worth home buyers who have said, I'll just go uninsured. I can afford to lose the whole thing. And we've had other ultra net worth home buyers say, I thought I didn't really care, but the sticker shock is so massive, I'm going to walk away from this.
Wow.
It's a real issue, especially at the high end.
Okay. When you say cash buyers, we're talking about wealthy buyers, right? Not everyone's
Oh
buying with
yeah.
cash.
Yeah.
Yeah, of course. The that leads to the another prediction: wealthy people will pay less to buy and sell homes as commissions decline slightly. Tell us about the changes in the real estate industry and what's going to happen to commissions and
Yeah.
the yeah.
Yeah. Well, just to go back in history here, so a bunch of people who were trying to sell their home formed a class, sued the National Association of Realtors, said the industry was a racket. And the basic change in the market is that buyers are now the ones who are paying their own agent, sellers are paying their agent. There are two agents involved in every sale in America, but the principals are paying the person representing them. And that didn't have much of an effect on fees this year. But there's a big question about whether it will next year. And there's an exception to that. When you meet somebody buying a $3 or $4 million house, they are much less likely to want to pay 2.5 or 3% of that home price to their own agent. Now that they're the ones setting the fee, they're more likely to say, I'll give you a flat fee of $10,000 or $20,000 or whatever the number might be. And that's just because when you look at 3% of $3 million, that's, I think, 90 grand. Um,
Hmm.
so it's just a lot of money. And those are the people who have the savvy and the wherewithal to say, instead of having it be a percentage of the proceeds, why don't I just pay you up front now? And that might be the tip of an iceberg of a larger trend where it moves down to middle income buyers. But right now, it's been at the high end where we've seen that pressure. And I just think we'll see more of it next year because the change went into effect in August of this year, and most of the home sales had already happened. And the ones that were still up in the air, the buyer had met his agent in June or July. The seller had met their agent earlier in the year too, and they'd already had their expectations set around price. So it's anyone's guess how it'll go next year. I've been surprised how entrenched the fee has been, that it did move more. I think government regulators have been too. Um, so we'll see what happens next. But I do think there's a good chance that there will be more fee pressure next year, especially among the savviest home buyers who can afford most easily to pay their agent right up front.
Okay, good point. Let's finish off on ultimately what this means for buyers and sellers alike. Starting with the seller, earlier in the summer, you had told me that agents were telling the sellers, "Hey, we've got to bring prices down a little bit to move these units." Is that still happening now?
It is. There's an unusual amount of stale inventory on the market at this point in the year. Usually, you've only got a few listings left, but we've just seen plenty of inventory still out there, and it's just a bit of a standoff because buyers have come rushing into the market a little bit. Sellers have heard about this, so they're thinking now this is going to bail me out. But one
Hmm.
reason the buyers came in is because they wanted to try to get a deal year end. So there's been a lot of demand and not as many transactions. There's still more transactions than there were, but um, it's been a little bit hard to get sellers to come down on their price or to get buyers to come up. It's just gotten a little harder to put deals together, but that's our job, and usually we can do it.
For the buyer, then they're probably listening to this interview and they're saying, "Well, the Redfin CEO thinks maybe home prices will go up by 4% next year." But on the other hand, I'm aware that the Fed is lowering rates. Maybe they'll lower rates from some more. I'm waiting for rates to come down. So what should I do? How would you answer? How would you go about answering that kind of concern?
Well, first of all, I feel tremendous empathy. There are people who
Yeah,
want to buy a home, want to be opportunistic, and they literally just don't have the dry powder. But
yeah,
if you do, I always give the same advice. I've seen people get a screaming deal on a house and have it be a disastrous financial investment because they just hate the house. And even if transaction fees come down a little bit, they'll still eat you alive. And so I think the most important thing is to buy and hold. And the only way to do that is to buy and love. So if you see a house you love, I wouldn't get hung up on the rate. If you think, oh, this is a good time to buy, but the house isn't really one that I love, I'd hold out. And it's not just holding out for a higher rate or a better rate, excuse me. It's really holding out for an asset that you can love and live in because even if you take somebody who bought in 2007, right before the housing market crashed, they are sitting pretty right now.
yeah.
But the people who had to sell 2 or 3 years later, either because they were financially pinched or because the place was just driving them nuts, they got wiped out. So housing is a good bet in America. We're not going to solve our inventory challenge anytime soon. It'll get a little bit better, but mostly home prices are going up. And I wish that weren't the case because I'm a huge advocate for housing affordability. And that does mean that if you can get in, you probably should. I just wouldn't do it to the point where, you can't get cheese on your cheeseburger and you're stressing every night. We have customers who stretched too far and I stayed in touch with them and they can't sleep at night.
Well,
They're in this
why
beautiful
are they
house they
stretched too
can't
far?
afford.
They just didn't they bought too big of a home. They didn't finance properly.
Yeah.
They like what's the issue here?
I mean, we all know what we're comfortable with.
Yeah.
I think they saw a house that they loved and they had to have it. And that was my first rule. If you love it, it's probably a good investment. And I do think if they can hold on to it, they'll sell for more. But it traded up in some kind of bidding war and they got competitive. And then they got to a place where every night they're worrying that the car's going to break down or a kid's going to get sick or some other cost is just going to put them into real financial distress. And it ain't worth it. It ain't worth it.
Let's lead to the final point and the last prediction that you have in this report. Gen Z will rewrite the American dream, cutting homeownership from the script. So let's talk about this age-old question of owning versus renting, which ties into Gen Zs and what they plan to
Yeah.
do in the future. I'll share with you this Globe and Mail article. I know Globe and Mail is Canadian. Renting is often a better deal than buying. That's because of how expensive it is to own a home. That's the valuations thing. But if you're buying a home, you might sell it for more, or you may not. Anyway, how would you answer this debate? What's the future for Gen Zs?
You know, I think a Gen Z person at Redfin probably wrote that prediction. I don't know if I'm wiser, but I am older. And my real take on it is that most people wait. They think they're never going to settle down and they just do it 5 years later. Look at all my gray hair, and still have kids in middle school and high school. So I was
That's
one of
right.
those people too. I still think people want to own their own home. It's a really fundamental need, but the age at which they're going to do that is going to shift from 31 to 34 to 36.
Yeah.
And so that means they're going to have, another 5 years renting a place. There are financial reasons to own a home. They are good financial reasons. I just wouldn't, mortgage everything in your life to be able to do it. You've got to be able to sleep at night with your mortgage payment. And so I think it's going to be a real issue, though, for American society and maybe for Canadian society too. One reason that Joe Biden couldn't convince people that the economy was doing better, even though it has been doing really great, is because they were living in their parents' basement. And it's just hard to feel great when you're sleeping on somebody else's couch about your prospects. to start a family, to own a home, to get married, to do the whole nine yards. So I just think if we have a bunch of people who don't believe that they're going to have what their parents had, they're going to be angry and they're going to vote one guy out of office after another. And we're just going to have more unhappiness threading through the fabric of our society, which is why I think we ought to build more houses.
That and the fact that do you think houses will get smaller in the future? I bring this up because the fertility rate is now below 2. This is a trend we haven't seen ever. And the population of the US and other countries is going to go down.
Yeah.
Less families, less
Uh-huh.
kids. What does that mean for housing?
I don't know because you make a really good demographic point, and I'll just make the counterpoint, which is that baby boomers are aging in place. We've got two people, 78 years old, living alone in 4,000 square feet. And the usual process of letting go, where those people would move to a condo or eventually into, a senior community or even assisted living, just hasn't happened. And what really worries me is there was this brief period during the pandemic when everything was up for grabs and people were moving to Montana and Utah and Idaho and everywhere in between. It certainly helped our business, but I also think it made America more dynamic. You want a liquid labor market where when you're stuck in place somewhere, you can just move to a better life. That's the story of John Steinbeck. That's the story of America. If you go to Europe, that's where people live and die in the same old village that their grandfather was born in. But now that we have 30-year mortgages at 3% from 2022, lock people in for 2 decades, I
Yeah.
think American life could become more sclerotic. That people who should age out of their homes or, go empty nest and get a smaller place just won't do it because when they buy that 2,000 square foot condo in exchange for their 3,500 square foot house, they're going to have the same mortgage payment because they're going to trade out a 3% mortgage for a 7% mortgage. So somehow we got to figure out how to get unstuck and we got to help a younger generation. And the only reason it isn't a big problem is because old people still control this government. I'm not talking about Trump or Biden. I'm talking about all of it at every level. And I'm speaking as an
Yeah.
old person.
Okay. Final question. I'll let you go, Glenn. Very
You're
good
supposed to
talk.
predict me there, David.
Foreign.
But go on. You can't. I'm 53. Let's keep moving.
Oh, you bring the life back to my podcast, Glenn. Foreign buying and foreign capital. What does that look like for you in 2025? What trade wars, protectionism, less, more of it. Does that factor in at all to your in your outlook?
It's not a huge factor, except in some markets like Miami. You see me kind of scratching my head here because I'm just trying to decide whether to tell you what I really think. I think there's going to be a crackdown on immigration, but not for people rich enough to buy a second home in Miami. Somehow they always seem to make it into the US, don't they?
I see. Yeah, yeah. I get you're saying.
I think the bigger factor, though, is that China has really gone through a sea change. I think you're still in Vancouver, aren't you, David?
I am. Yes.
Yeah, I don't know if it's affected Vancouver as much as it has other parts of the US, but 5 years ago, there was such a huge boom in Asia
Hmm.
and there was so much money coming to the United States, and that has really subsided. I think it's
Hmm.
subsided even more in Canada because there are now extra taxes that foreigners pay to own homes in Canada.
Yes. Yeah.
But the same thing happened in the US. So from Asia, I think there's less demand. Maybe the last thing I'll mention is just that no matter what happens to the US economy, it seems like it's always better than the rest of the world. Like we have inflation here and we think this sucks, but it's actually worse elsewhere. Um, so, we keep trying to screw it up here in America with our economy, um, but other countries are screwing it up worse or faster. Um, I guess we'll count our blessings.
Yeah. Well, let's find out. Glenn, great talk. Tell us about Redfin, where we can learn more from Redfin and you.
Oh, Redfin is my great love. So you should use Redfin to look for houses, but you should also use Redfin to buy houses because we give consumers a better deal, charging a commission that's about half the price, and the service is so much better.
How
So
how are you able to do that? Just in 2 sentences or less, make the fee so much lower.
We have real estate agents who close 3 times the number of sales. Instead of one sale every 2 months, they close 2 sales every month. And the reason they can do that is because the website brings customers to them instead of having them spend all their time on Instagram telling some sad story that will try to draw a customer.
All right. Fair enough.
It's the truth.
Check out Redfin. Link down below. Glenn, it was always great to see you. Thanks for being on the show. Happy New Year.
Thanks, David.
Thanks for watching. Don't forget to like and subscribe.